This video documents real-time analysis of historic gold price surge to $5,000 per ounce occurring simultaneously with dramatic dollar devaluation in hypothetical scenario. Adjust to actual market conditions, if this is real, creating unprecedented wealth transfer opportunity, where gold just hit $5,000 per ounce. The dollar is collapsing. While most people panicked, I called 12 millionaires to ask what they're doing with their money. What they told me will shock you and could protect your wealth. Opening with realization that waking to financial news showing gold breaking all-time highs, while dollar index plummeting creating, is this real? Moment requiring immediate research and action, promising complete transparency, showing exact timeline of crisis, events proving this being legitimate historic shift, not hype. The 12 millionaire conversations, revealing unanimous patterns, where wealthy moving money strategically not emotionally. Specific actionable strategies anyone can implement regardless of account size, creating accessibility, and honest assessment of risks, where crisis creating both opportunity and danger, teaching that wealth preservation requiring knowledge, not panic. Before watching, do you own any gold right now? Comment yes and oh, or I wish I did. Acknowledging context and methodology, we're reaching out to 12 millionaire contacts from previous interview projects. Within 24 hours of gold $5,000 breakthrough, asking identical questions about their immediate reactions, current portfolio moves, and crisis strategies, enabling systematic comparison across wealthy individuals representing diverse industries, tech entrepreneur, real estate investor, hedge fund manager, physician, business owners, retirees. Ensuring patterns being universal, not sector-specific. Conducting this as real-time documentation, not hindsight analysis, where conversations happening during active market volatility, capturing genuine strategic thinking under pressure, not theoretical peacetime planning. Recognizing limitations, including small sample, 12 versus hundreds for statistical significance. Elite bias, millionaires having options unavailable to most people. And hindsight revision, where some strategies possibly being presented as more intentional than they were, but emphasizing that patterns being remarkably consistent, suggesting genuine wealthy class response to crisis, creating valuable insight into how rich protect and grow wealth during chaos. The timeline documenting exact sequence, where Monday 6 a.m. Eastern Standard Time. Gold breaks $4,800 with accelerating momentum, previous all-time high being $2,100. Monday 9:30 a.m. Markets open with gold futures limit up, dollar index down 4% overnight, creating largest single day move in decades. Monday 10:15 a.m. Federal Reserve emergency statement acknowledging extraordinary market conditions and monitoring situation closely, creating panic that Fed losing control. Monday 12 p.m. Gold crosses $5,000 threshold, representing 138% gain from previous high and 400% gain from 2020 levels. Monday 2 p.m. Treasury Secretary emergency press conference announcing dollar remains strong, but markets not believing, creating credibility crisis. Monday 4 p.m. Markets close with gold at $5,147, dollar index down 6.2%. and stock market down 8%, representing historic single-day crisis, creating wealth destruction and creation simultaneously. Documenting that between Monday close and Tuesday morning, making all 12 millionaire calls, capturing immediate wealthy response to crisis, creating real-time strategic snapshot. The crisis happened in one day. Gold $5,000, dollar down 6%, stocks down 8%. Where would your money be? Comment. Gold, cash, stocks, or real estate. Discovering unanimous millionaire patterns, we're finding number 1. None were surprised. 11 of 12 millionaires saying, I've been expecting this, revealing that wealthy monitoring macro trends, seeing crisis coming months ahead, with specific quotes including, the writing was on the wall since earlier events. I positioned for this 6 months ago. And this isn't crisis, this is transition. Teaching that wealthy being proactive, not reactive, where crisis being surprise only to those not paying attention, with hedge fund manager explaining he's been overweight gold since previous year based on debt levels, deficit spending, and currency debasement concerns, demonstrating forward-thinking macro analysis. Learning that millionaires having crisis playbook, where they've already decided strategic responses to various scenarios, eliminating emotional decision-making during volatility, teaching that wealth protection, requiring preparation, not improvisation. Finding number 2. They were already diversified. 10 of 12 already holding gold/precious metals, averaging 12 to 18% of portfolio, versus American average 1 to 2%, meaning crisis being portfolio adjustment, not emergency reaction, with typical wealthy allocation before crisis being stocks 35 to 45%, real estate 20 to 30%, bonds 10 to 15%, gold/commodities 12 to 18%, cash 5 to 10%, alternatives 5 to 10%, creating true diversification where single asset crash, not destroying wealth, teaching that diversification not being theory, but practice for wealthy real estate investor, explaining, I keep 15% in gold as insurance I hope to never need, demonstrating wealthy using gold as portfolio ballast, not speculation, learning that diversification enabling calm during crisis, where when gold rising 40% offsetting stock declining 8%, creating net portfolio stability despite individual asset volatility, teaching that wealthy building anti-fragile portfolios, surviving any scenario. Finding number 3. They increased gold positions, but modestly, average adding 3 to 5% more. Allocation moving from 15% to 18 to 20%, gold representing significant dollar amount, but not panicked, all in, demonstrating disciplined rebalancing, not emotional trading. With tech entrepreneur explaining, I'm adding to gold because it's working, but I'm not abandoning everything else, showing balanced approach where conviction not equaling recklessness. Physician noting, I bought more gold miners, stocks, not physical gold, revealing sophisticated understanding that mining companies providing leverage gold exposure, often outperforming metal itself during bull runs, teaching multiple ways to play trend, learning that modest increases based on rebalancing, where gold increasing from 15% to 30% of portfolio due to price rise requiring selling back to maintain target, creating mechanical discipline, preventing emotional extremes, teaching that wealthy having allocation targets, enforcing buy low sell high automatically. Millionaires were already 15% in gold before the crisis. Are you at least 10% gold? Comment your percent honestly. Finding number 4. They're avoiding dollar cash. Unanimous agreement to minimize dollar holdings, reducing to bare minimum for liquidity needs, 3 to 6 months expenses only. Moving rest to hard assets or foreign currencies, with business owners stating, cash is trash in dollar collapse, explaining that holding depreciating currency being guaranteed loss. Retired executive diversifying into Swiss franc, Singapore dollar, and Norwegian krone, explaining, don't replace dollar with another fiat, diversify across multiple currencies, teaching currency diversification being sophisticated wealth preservation, learning that cash, not meaning dollar bills, but rather liquid alternatives, including money market funds, short-term treasuries at 5% plus, high-yield savings, and stable foreign currencies, teaching guaranteed loss. Retired executive diversifying into Swiss franc, Singapore dollar, and Norwegian krone, explaining, don't replace dollar with another fiat. Diversify across multiple currencies, teaching currency diversification being sophisticated wealth preservation, learning that cash, not meaning dollar bills, but rather liquid alternatives, including money market funds, short-term treasuries at 5% plus, high-yield savings, and stable foreign currencies, teaching that liquidity not requiring dollar exposure specifically. Hedge fund manager explaining, dollar will lose reserve currency status gradually then suddenly, predicting 10 to 20-year transition where dollar remaining dominant, but losing monopoly, creating opportunity to position ahead of inevitable decline, teaching that massive macro trends being predictable if watching carefully. Finding number 5. They're buying real assets. Unanimous shift toward tangible wealth, including real estate, commodities, productive businesses, and precious metals, moving away from financial assets, stock/bonds, toward physical reality, with real estate investors stating, own things that produce value, land, buildings, businesses, explaining that financial assets being claims on future dollars, worth less, while real assets being actual wealth. Several millionaires mentioning farmland specifically as ultimate real asset, producing food, universal need on land, limited supply, creating inflation-protected cash flow, teaching that crisis, accelerating trends toward tangible wealth, learning distinction between real assets, land, commodities, productive capacity, and financial assets, stocks, bonds, derivatives, where real assets being wealth itself and financial assets being claims on wealth, teaching that dollar collapse, making distinction critical, where financial claims denominated in depreciating dollars losing value, but real assets maintaining intrinsic worth. Finding number 6. They're not panicking or selling everything, none. Recommended abandoning stock market, maintaining 30 to 40% equity exposure, but shifting within stocks toward inflation-protected companies, including commodity producers,